Samir Arora joins us, founder Helios Capital. Good morning.
Good morning.
कल क्या हो गया? FI sold, DIs bought, but markets fell.
That is why you see, to survive in this market, I've been doing it for 30 years. Upar niche. But yesterday, it didn't look like FII selling because institution, in particular in liquid shares, don't sell like this because they won't be able to sell anyway whatever they have. So I guess that it was more to do with Indian leverage selling being sold by brokers or whoever financiers more than otherwise.
Okay, now,
And therefore, it might be plus minus somewhere, maybe short term, maybe medium term bottom, or maybe, I don't know, one more day, 2 more days. But generally, you tell me, up to December, the foreign investors were like in the month of December, foreign investors bought. In the whole year, they sold, if you include primary plus secondary, some $1.4 billion. And I just saw on a Goldman report that in whole of Asia, they sold 24 billion, that is excluding China. What happened in January for them to sell 10 billion and people to think that, India, something has changed? What has changed exactly in a 15, 20-day period? I don't think it is that. It is just momentum begetting momentum kind of thing. Obviously, some stocks will correct more or less.
so I keep the FI equation out of the picture, and FI sold yesterday, DIs bought. So I'm assuming that the net liquidity yesterday, by and large, was neutral. It's not that net institutional liquidity is very negative. But the selling in mid and small cap stocks, I think, is where we need to probe a bit further.
Local by local types, yeah.
Yeah,
Yes.
yeah. So the point is, and there are a lot of scenarios, and perhaps we lean on your experience to perhaps guide our viewers here. First is, this kind of selling in small and mid cap stocks, could that accelerate further because the ownership levels and the valuation comfort is still not there? So bad could really get ugly before it gets better.
So big picture is that normally in the long run, small caps don't do materially different than the market. I made that presentation in November last year, basically showing that if you look at 20-year type of number, then this Nifty small cap index or whatever it's called, NSE small cap index was basically in line with the 500 index. Actually, it was a little lower. So when the phase of small and mid cap outperformance is there, and that outperformance is of the extent of some big number, say 8% per annum for 3-4 years, generally some excuse will be found to correct it. So I have not done it today to see whether these things have come back to longer term average, maybe not. But in the meantime, a little bit has changed in the character of the market because of flows to domestic mutual funds and small cap funds being very big. So you can say a little bit higher because there is a little bit more local risk-taking capacities in INR terms. FI has to worry about INR and currency and all that, which local guy doesn't have to. So you can say, okay, bump it up 1% extra per annum kind of thing. It will be plus minus there. It won't be materially different. So it can correct a little bit more, but I don't think it is like over and that means that the category is over. I don't think that is the case.
But I think, Samir, the
But for
bigger.
us, last year when we were thinking of different mutual funds, and it was easiest to raise money in mid cap fund and small cap funds, we decided not to do that. Now, actually, we are going to do a mid cap fund. But the point is that it could correct 5-7% more also. But I don't think it is over and done and now history. And now, please, everybody buy HDFC Bank. I hope they do that also. But it doesn't work like that.
Yeah, I was, just going to talk about that, while panic never makes money, Samir, but has the time now come to start nibbling in and buying small and mid caps?
So that depends on what you do depends on what you have done. Means in aggregate, the flows into small cap funds were much bigger than they should have been from the mutual fund, into the mutual funds. So that would mean that maybe that is not required so much to add. But individually, people will add funds which are diverse, like flexi cap fund, we might add here or there. But I would think in aggregate, the flows were a bit disproportionate. And therefore, in that sense, the public which is watching your channel maybe should go into larger oriented just to balance themselves. Forget about which will do better, because this whole game is one of being able to go through cycles and go through phases and still be able to watch Netflix in the night, which is a key part of my investing strategy, that I must be able to watch Netflix. So therefore, don't overdo anything, but otherwise, yeah, once in a while, why not? It can't be that every stock will be down every day. It never happens like that.
Uh, so Samir, I'm just constructing all the scenarios here. Now, one scenario is that, okay, money does not move out of equity market, but it moves into large cap stocks. So it's not that equity money moves out. Allocations don't change. Everyone says, okay, we will do the SIPs, we will stay invested in equities, but we will invest in a different asset class. So
Awesome.
could there be a situation where small and mid cap stocks will attract selling, but money moves into large cap stocks?
That's what I was saying. It's very simple. Just broadly see last 3-5 years, which I will see after this. I didn't sort of update it last few weeks, but if you broadly see that small and mid cap are more or less in line with 500 plus. As I was saying, add 1.5% also if you want to add per annum because of the new investor class. If it is come in that range, then it's okay, because that is the historical 10-year, 50-year, 20-year number, that in the end, small caps, mid caps, large caps, there is no difference. Actually, mid caps slightly outperform everything. And I think one reason for that is that mid caps are discovered small caps, which have already sort of little bit matured. So they are able to handle the economic uncertainty, some order cancellation, some interest rate hike, etc., a little better than the complete small caps. And therefore, actually, if you see, I mean, it's just you need a few change the periods, and you can see that mid caps outperform by like 1% per annum and small caps don't. But whenever you're in the middle of a cycle, then the small and mid will look as if they are outperforming by 6, 7, 8% per annum for the previous 2-3 years in which that cycle you find them, and then they give it up. Now, sometimes I used to think that because of these flows, maybe the giving up will be gradual, maybe it will be consolidation, but in the end, when they correct very fast. So it doesn't need deeper than that. What else can we say? We can say that history is the best guide, that over time they will plus minus revert to what the other indices have done. And maybe a little extra you can give, as I said.
Yeah, sure. I don't think anyone can time it or quantify it too perfectly.
Yeah.
But Samir, I think the bigger question is what will recover faster and where is it that you need to say? You've established that perhaps large caps are safer, but within large caps, do you stick with banks? Do you buy more of the same?
Well, banks and IT also we like, because IT guys did say that next year they're getting faster, or I mean they're getting orders which are taking shorter to get in terms of time taken to get an order, and those orders look more discretionary type. They are the 20-30 million dollar type orders rather than those big 500 million type orders which are multi-years, but therefore are related to some cost takeout, and therefore getting that order takes time, and then getting it started takes time, and then in the initial period you may not make money, and it may be more back-ended, so you need a faster turnaround. Currently it's similar to what the government did with consumer spending or whatever sentiment, that they cut taxes because you need faster response, or things that have a quick response, rather than saying we'll invest in something which is long gestation, which otherwise might be better in a 5-year horizon. You have to deal with the short term also. So if you get short term orders, it is good. So I think IT is also okay, and financials were always broadly okay. Now there are few financials which are more market related. For example, all these brokers, asset managers, all those, some of them we own. Now the big picture is that you will grow, market will grow 10-12%, and then you'll get 5-6% new flows. So you'll get 15-18% revenue forever. But in between, when you have a bad year or a flat year, then those 10% that you were supposed to get from just the market going up, and therefore just a higher price, no other activity required, and you'll get a higher fee, that gets doubted. But otherwise, once it settles, all these things will start. Please remember, everything happens again and again. Some 5% stocks change because they are not able to keep up with the new environment, and rest of life moves on. So then you go back to whatever you liked before. Some stocks will take a little longer to come to that level. Some have already come. Big picture, there is no reason to say that something happened from December to January, specifically to India. The rest of the world is doing okay. We also broadly were doing okay till December. If there had been a shock to the system, some outright big fraud in some company, some corporate governance issue which makes people feel that this whole thing was a game, was a scam, or some blowout of a big company for some leverage reason. So you say these are hidden. Nothing happened. Everything is plus minus similar. And so this will settle. It's not that this loss is going to be recovered in 1 month, 2 months, but over 5, 6 months, 8 months, it'll be all similar again to our longer term history, which is broadly making returns in line with earnings, and some small cap, mid cap, which may have gone up much more than that, will correct or take longer to, they will either stay at a low for long or recover, and some of them will go out of existence.
Samir, so let's assume a year from now, and that's a reasonable time for market to settle down, mid and small cap stocks to stabilize. A lot of dust would have settled here and there. Which end of the market do you think, apart from banks, could trade higher? And which end of the market do you think needs to correct? It could be because of valuations, it could be because of ownership. We don't know. But where do you think there is still more downside left?
I don't know, but in general, I am most excited about my one food delivery company because I have a big picture logic that if market is bad, then the third guy cannot go public. And the third guy has a defined time. He has maybe 10 months of money. If 4 or 5 months pass and the market is not willing to give that valuation, they have to panic because then they will have 4 months of money left. So I think they would have already realizing that this is now a dangerous time. Forget about danger for some shareholder who has got fully paid shares. We are not like, we means funds are not on leverage or anything, but effectively these companies which have to do IPO are effectively working on a leverage, not directly leverage, but their money runs out. All you need is two lines of saying that these things have gone back, because I do not believe even for one bit that this number one food delivery company has fallen because somebody has discovered something. It is just a reaction to selling, which is being done in an aggregate way. These guys get so much this thing, oh my God, what is happening? You look at all the consumer high quality companies from Voltas to Trend to all are falling 30-40%. Some of them are growing normal and some of them are going super fast. So I'm still very bullish on that. In terms of other companies, there was this issue for us also that some of these companies I told you are these market related stocks, in which one of them is, I think you are in that studio or something, all those stocks we own. So all those stocks are good, but you need a little bit of the market to stabilize so that you can say, okay, mark to market losses, this, that are over, and then the actual general financial growth of India will continue. So it's not just the banks. But the other ones need the market for us to be 100% sure that this is not some super big deeper correction, because then that would throw off not just NAVs down, but flows. So in a few days, maybe today, I think, or tomorrow, we are supposed to get the mutual fund flows. Or have we got them already? I think we haven't. So that also will be one indication whether the public is still investing or not. Because we are a small fund, we got money in January also, both from mutual funds and FIIs.
Well, we'll get that data today, Samir, the Amphi data, and we're also waiting with bated breath for that one. But yeah, markets will do what they do. Tell me, what's the Netflix list like?
So Netflix, whatever comes, basically because I have made like 5-6 times on the stock, so I see everything. It is one of my biggest this thing. But Netflix, this one I saw that, what is it called? Which was not good, Night Agent was not so good. Then we saw that India-Pakistan, the whatever, rivalry, 3 episodes. I was getting ready to go to Dubai for that. So these are the new ones I've seen.
Okay. So, Samir Arora, I think you'll have to do some magic tricks, bhai, for markets to go up now.
Whenever you talk, your first few words I can't hear. After that, your voice, the sound goes up.
वो
You have to figure
स्टूडियो
out what
में हमारे
does.
फेडर होता है, वो बटन दबाना पड़ता है, ऊपर करना पड़ता है, वो आज थोड़ा ढीला चल रहा है. Okay, so some magic tricks now.
No,
before you disappear.
magic. If my market goes up, I don't need any magic.
Well, it's just been such a fun conversation, and thank you. You know, we did not discuss stocks for a change. We did not discuss market levels for a change. We did not discuss anything which is about, you know, themes and sectors. It was pure vanilla approach. An experienced fund manager who's seen years, really, you know, indicating to our viewers that what you should do, because ये cycle है जी, आती रहती है, जाती रहती है. इनसे हमने बहुत cycles
Cycle, no,
देखी.
but we are hoping that this is a short cycle because we have not been able to find either a global factor or some local factor. कोई एक चीज स्पेसिफिक होनी चाहिए. Valuations could be one, but then that would be, you can say, okay, apply to 1/3 the market, which is very expensive. बाकी specific नहीं मिला, इसलिए ये short cycle है. Which, and also quickly, the government has also responded well, both from RBI point and the budget point. So थोड़ा they have also seized of the matter and are trying to respond to that. So that is the hope now. Let's see. Okay, thank you to everybody.
Thank you very much, Neeraj.